Because this is going to be a big multi-year initiative for Tesla, billions of dollars likely in terms of investment. But I do think they just want to hear if they're going to sell more cars. Like, when does that top line pick up for this company? Because they're not making money off robo-taxis, at least for the next few years.
Yeah, Brian, you're absolutely right. And when it comes to sales, the U.S., we're slipping abroad. There's a lot of competition on that front, and cheaper EV models too. That was something that analysts were hoping we could see before the expiration of those EV tax credits at the end of September. We haven't seen that. We likely won't. So what does that mean for the competitive landscape here? And it's coming at a time where consumer purchasing behavior has shifted a bit. There's more of a favor for hybrids than pure EV plays. On the infrastructure side, we're still lacking a bit there. So where's the innovation here? What does Elon Musk plan to do to reinvigorate some of these sales? Because it is core to the business. It is the part of the business that's making money. And we've just seen struggle after struggle on that front. So he's going to have to come out and say something that's encouraging to investors, as that's not just 5-10 years down the line. What is the short-term plan for Tesla to reinvigorate sales and get some profits?
Pete, we've seen some pretty strong moves in Tesla the past few earnings reports. Your team at Tasty Treat seeing anything in the options market ahead of this Tesla release?
You know what? Vol's in a little bit on Tesla right now. We see about an expected 23% move going into the earnings announcement. Customers, for the most part, are still bullish, but we're seeing that play through most of the Mag 7 names right now. So we're seeing a relatively, with volatility in at these levels, Tesla a little bit different story than a lot of the other Mag 7s, 20% below its highs. Not seeing a lot of skew in the options change, giving us some indication as to that. But again, we're looking for right now around that $23 move on either side on the earnings.
Ross, last word over to you. What's the more important report this week for the market more broadly? Is it Alphabet or is it a Tesla?
I think it's Alphabet. Tesla has always been a kind of the idiosyncratic member of the Mag 7, lumped in because of its size and its tech adjacency. But as you mentioned, it sells cars, so it's got these AI links and big tech aspirations, but it kind of sits on its own. Alphabet is an AI story. It's a big tech story. It's a story that's has a lot to do with the EU trade and some of the non-tariff barriers over in the EU. So there is a lot there, and I think that the extent to which AI tools like ChatGPT are cannibalizing or eating some of the moat around that company, around changing the way that we use search, the way that we interact with our software. That is the story, and that is the company that's most going to tell the story about how AI is working in our lives. And that's, again, we've got the Mag 7 at all-time highs. We're back on the AI train. So that's the thing that the market is thinking about right now. I think that's the bigger story.
Joining me now with their top picks among the biggest names in the market, George C., Annandale Capital founder and chairman, and Olivier Blanchard, Futurum Research Director for Semiconductors, EVs, and Autos. Gentlemen, thank you for being here. George, I'm going to start with you. One of the sort of ongoing themes we've been talking a lot about this morning is that even if companies beat estimates, that doesn't mean the stocks necessarily go higher. And I'm just curious from a big picture standpoint, how you're thinking about how that could apply to some of these Mag 7 names.
Well, that's the pertinent question, actually, because if you're a money manager and you're trying to do right by your clients and yourself in terms of performance, you want to try to double your money on these kind of investments as rapidly as you can. I think 5 to 7 years is a appropriate benchmark to do that in. And I think it's really hard to look at any of these companies except for Google and say you're going to do that in that time frame. They're very, very expensive. It's hard to see them getting doubly that expensive in a short period of time. So I think that the risks are kind of against you at this point. You've got to be kind of circumspect in terms of when you want to buy into these companies. They're great companies, but great companies are not always great stocks. And you look at the Nifty 50 back in the 70s, and you look at all the tech stocks before the tech bubble popped in 2000, and you think, maybe we ought to just watch for a while, because they got to beat really, really big for them to keep going up extensively.
George, you mentioned that Google or Alphabet would be the exception here. Why?
It's just so cheap. Everybody's so down on all the antitrust actions against Google, and They're really down the stock, and they've driven it way down from a multiple standpoint. I think the odds are in your favor with Google. I think it's just such a great company. It's got so much going for it, and if it eventually gets broken up, the parts are worth a whole lot more than the aggregate right now that in one stock. So I don't think it'll get broken up. I think it'll stay together, but I still think the odds are in your favor with Google. The rest of the stocks, especially Apple and Tesla, I just don't think you've got the odds are in your favor right now.
Olivier, I want to get your take on Alphabet and how you think it is positioned here from a fundamental standpoint versus some of its competitors.
Hi, Julie. I think George is right on a lot of the things that he says. I agree pretty much with everything that was just said. I would just add that Google has a really, really strong position in AI. And I know that in previous segments, and just as kind of like a general discussion, OpenAI has been sort of, eating into the market share of Google's kind of like AI business. But Gemini is super strong. It has super strong integration into all of its products. And I feel like ultimately all of this is just an ROI discussion, right? Which companies can cut costs the most and which companies can generate the most revenue, the most profitability. Google is still sort of like in the building phase with Gemini, and it's outpacing a lot of its competitors. I wouldn't say that it's ahead of OpenAI necessarily, but I think that basically when we're talking about agentic AI, we're talking for consumers especially, and search. We're talking about OpenAI and Google, and then in the enterprise, we're getting into AWS and Azure. But Google has a really strong position there, and I'm just generally impressed with how good Gemini is, how well integrated it is in every single product, whether it's hardware, software, search. It's just a revenue machine, just waiting to sort of find its paces in terms of how they're going to generate that revenue, but it's scaling.
Well, and Olivier, something else that's interesting when you talk about the ROI and the cutting cost side of the equation, something else that is bubbling up more and more is the cost savings that AI is presumably going to afford not just these companies, but maybe all companies. And I don't know if, besides Meta sort of throwing millions of dollars at individual executives to come over, are we going to see sort of a wholesale cost savings across the board once AI starts to take hold a little more firmly?
Yes and no. There's a cost shifting for sure. I don't know that there's necessarily a cost savings because on the one hand, training these large AI models is extremely expensive. Investing in the infrastructure that supports that training, and then later on inference is also really expensive. So you're seeing all of the spending in data centers and chips, which is obviously really good for NVIDIA and AMD and TSMC and all the chip companies in that ecosystem. But right now it's still cost shifting. There's also a lot of energy concerns, the energy consumption of training AI. But the one sort of hopeful thing that I have, and that we'll probably see towards the end of this year, beginning of next year, is I think we're going to achieve parity between AI training and AI inference. And inference is kind of like the workloads of you asking AI to do something and it just does it for you. The training is a lot more power intensive than the inference. And so I think that as we transition from a primarily training phase of this AI revolution to an inference phase, we're going to see the market shift. And when the inference really kicks in, that's when you should start seeing a lot of the applications that allow people to be more productive. And those productivity gains should sort of overpower or compensate the initial costs of getting that going. So we'll see that shift start to move towards the end of this year, beginning of next year.
And guys, I'm going to ask you something else that I think you agree on, and that's about the other Magnificent Seven name that's reporting this week, which is Tesla. George, you're not interested in owning Tesla, I guess, going into the earnings or at any time?
At any time. I just don't see the compelling nature of owning Tesla. I've never owned it. I don't plan to own it. I'm not shorting it. I don't want to bet against Elon Musk. That's been a bad bet for a very long time, but I see better opportunities out there than Tesla. FOMO
is not an investing strategy, George?
Not for me, no.
Olivia, what about you when you look at your analysis of Tesla?
From a technical standpoint, unfortunately, I haven't seen really a lot of innovation come out of Tesla. I'm not seeing any exciting. The designs are still just, it's not competitive with companies like BYD, for instance, in China and Europe, that are essentially putting out very similar products to Tesla, but better and more cost effectively and with better battery life and better, faster recharging rate. So what I'd like to see from Tesla is a real turnaround in terms of innovation and product design. And that's a long runway in the automotive industry. You could turn a company around if you're building, smartphones and computers in 18 months. For Tesla, you're looking at a cycle of 2 to 3 years minimum. So even assuming that Elon Musk completely focuses on Tesla for the next couple of years, you're still not going to see that turnaround for a while. And so I'm just not enthusiastic. I don't know that Tesla is part of the Magnificent Seven next year. And for me, it's kind of like, it's something that I say as a sort of a snarky joke, but I just don't see how Tesla comes back anytime soon.
Yeah, and the if of him spending all of his time on Tesla is a big one, obviously. And finally, George, the other, when we're looking at the Mag 7, the other comment from you that really stood out to me had to do with Microsoft. You called it, in your note, arguably the greatest company in world history. That's quite a statement, George. What supports that in your view?
Oh, I think it's completely accurate. I mean, the run they've had, how long they've been around. You look at Cisco Systems, and that was kind of the stock back 25 years ago, and they've never reached their all-time high they reached in 2000, whereas Microsoft is roughly 10 times higher than that now. And they've been so well run for so long, and they've been on the cutting edge of so many different things, and they're very innovative in terms of the new markets they rush into and rush into successfully. I just think it's astoundingly successful, and I think it's likely to continue on past NVIDIA, past Apple, past Cisco Systems. Everything else has been kind of their competitors at the top of the food chain because they're so diverse and they're so well run. I stand on that statement.
Well, retail investors are driving record single stock option volume this year. Among the favorite names, Magnificent Seven member Tesla, which reports results later this week. Joining me now is Henry Schwartz, Vice President of Derivatives Market Intelligence at Cboe Global Markets, which operates the world's largest options exchange. And I want to talk big picture, but first I want to zoom in on Tesla. Henry, thank you so much for being here. Because Tesla is an options favorite, so what are we looking at ahead of the earnings?
So, I mean, retail investors love to use options on these Mag 7 stocks. These are the stocks they pay attention to. These are the stocks that have a lot of volatility, so you get big moves up and down. These are the stocks that are in the headlines. And Tesla's been really interesting, right? Because it really kind of got away from, the value as an electric car company a long time ago, and now it's just a story stock. So, what we're seeing in terms of trading into earnings is actually similar to what we're seeing in most of the Mag 7 names. We're going to see 6 out of the 7 are reporting the next 10 days. The options actually are kind of saying that the reaction to earnings is not going to be anything of a blowout. And that makes some sense because that's not really what's driving, certainly not what's driving Tesla. Right. And even kind of most of these, it's the story around the stock. It doesn't really have a lot to do with straight up financial results right now. Right,
at least not for this quarter, right. Especially since we know that Tesla's numbers around its fundamental business are probably not going to be fantastic.
Exactly.
So interesting to pay attention to that. I want to bring up another stock that we were just talking about, and that is Opendoor. Because when I see an 80% plus one-day move in a stock, I assume that options are a part of that move. Is that a correct assumption?
It absolutely is.
In some way, shape, or form.
It absolutely is. Actually, I went and looked quickly at kind of the history on this symbol. It's not the most active name. However, today we might see over 2 million option contracts trade out of a market total for the single stock space of about 20 million contracts a day. Wow. So for Opendoor to be trading 10% of the volume, that's bigger than the average daily volume in Apple and Tesla. What we're also seeing is very interesting is the implied volatility, which is a measure of the prices of options in open, is around 400 to 500% right now. And what that actually tells you is that the market is expecting this stock to move on average 35 to 40% a day for the next couple of weeks. So this is not really going to go away. And it's funny, when Open was a 50-cent stock about 3 months ago, many people would say, well, actually, the stock's kind of like an option, right? It can only go down to zero, but maybe it has, kind of unlimited upside, just like a long call. Now that you're kind of in that, approaching $4 or $5 spot, I think many people would say that the stock still is like an option, but people go into the options, particularly upside calls, for the leverage and for the kind of the convex payoff. It's a little bit like what we saw in GameStop in 2020. You capture the attention of a lot of traders, and to see just immense amounts of activity. It's primarily retail that's coming into these, but then when you see this kind of flow, it pulls in kind of pro-tail, basically semi-professional retail, and institutions as well.
And this huge wave of option trading that we have seen, not just in Opendoor, but in general, is it mostly sort of vanilla call buying, or have traders gotten more sophisticated as well?
So it's a good question. So really during kind of the COVID era, a lot of new retail traders came into the market, and call buying really was kind of the primary activity, and it makes sense because it worked very well. We had such an explosive rally after kind of the bottom in 2020. You could kind of say the same thing about how we've done since the beginning of April, right? We've had a monster rally that I think surprised a lot of people, and anybody involved in upside calls generally kind of traders tend to come into those from the long side because of the fact that the risk of being short a naked call is is infinite technically. So we do see a lot of outright call buying, especially in a meme stock style name. But then we are seeing more sophisticated activity, particularly in the zero DTE options on SPX, which is the S&P 500 index. The two big stories over the last couple of years have been retail activity and short dated and zero DTE trading. And in the zero DTE trading, it's a little bit different. People actually tend to sell options, but they do it in a capped risk, like a vertical spread. And there's a very active community that does that continuously, almost like a quantitative strategy. Some of them use tools that let them actually trade it automatically. So there is more sophisticated activity. But I have to say that when you get into kind of these names that go up 20, 30, 40% a day, that's not the most sophisticated flow. That's people jumping in because they really, really want the payoff profile that derivatives give them, particularly the upside call on a stock that's jumping. We
were just showing a chart that you brought us that shows that zero TD option volume, non-institutional meaning retail, on a daily basis. This is what it tends to look like. What is this chart? What story is that chart telling us?
So this is actually, I showed this at a conference and everybody was kind of flabbergasted. The customer base that is using zero DT options and selling vertical spreads, okay, they're trying to basically put bounds around the market and say, listen, I think the market's going to stay within 50 basis points today, so I'm going to sell spreads that are outside of that range. What's really interesting, what this chart shows, is that there's kind of a time signature to that. So we see spikes at 10 a.m. and 10:15 and 10:30 and 10:45, really on every 5-minute node, we're seeing a spike in activity. That really is these traders coming in with automated systems to try to harvest premium. But what's really interesting is you look at this chart, and even people that haven't traded options much, they kind of realize, well, gee, I don't think it's a great idea to jump in right when everybody else is jumping in. So this kind of creates a dynamic where people are like, well, listen, if I'm going to do this strategy, and there's traders that have great success with this strategy, just like anything else, it's not, there's no free money out there. But you have people saying, okay, well, maybe a second before that, the 10-minute interval is really when I want to make my trade. So, but that activity, we're seeing in the SPX 0DTE about 1.5 million contracts a day. It's more than half of the activity consistently, and it's not just in SPX. We're seeing it in the other big indexes and ETFs that have these daily expirations.
So let me ask you this, Henry. We are scratching our heads and saying there seems to be a lot of obstacles to stocks going higher, and yet stocks keep going higher. How much of it is this type of activity?
I don't think that the tail is wagging the dog when it comes to kind of options versus the underlying. Options provide they have leverage kind of inherent to what an option is. They do let customers, particularly retail, get into stocks that are expensive, right? So. The kind of the why we're seeing just new all-time highs, even though there are some major macro and geopolitical tensions. I actually had a colleague ask me at work last week. He's like, "Why does the market keep going up?" I said, "You know what? It's where people are putting their money." And and in the end, we saw what April was like. Right? April was a big shock. Yeah. There was a lot of fear. We know that kind of trading off emotion is detrimental. It does not work. And so, I think the market definitely has kind of an optimistic view right now. But, and they could swing the other way. But it's there's a trend there. And, as traders say, the trend is your friend.
Yes, I guess if you're an options trader, it can really be your friend if you supercharge it. Henry, thank you so much for being here. Appreciate it.
Sure.
Tesla reporting second quarter earnings after the markets close on Wednesday. And one area investors will be, of course, keeping a close eye on, that would be the company's outlook as President Trump's big, beautiful bill phases out energy tax credits. For more, we're bringing in Jed Dorsheimer, Group Head of the Energy and Sustainability Research Sector at William Blair. Jed, it is good to see you, my friend. I think, Jed, correct me if I'm wrong, this is the first time I think I've spoken to you, Jed, since you did downgrade Tesla. You went to the equivalent of a hold, Jed. I think you did that a couple of weeks ago, earlier this month. Maybe start there, Jed. Walk us through why that downgrade.
Yeah, Josh, thank you for having me back. And it is the first time I think we've spoken since the downgrade. I don't think the big, beautiful bill is going to be beautiful for Tesla. That's kind of the heart of it. I mean, I've had, a positive bias on Tesla for a long time over my career, which has benefited, which has worked out quite well. But I think there's some challenges, and I don't think those will manifest this quarter or even next quarter. In fact, if anything, I think you could actually get some upside this quarter and next quarter as you pull in deliveries before the expiration of the tax credit. But there are challenges, and I think the challenges are going to show up primarily in the auto side of the business, but also a little bit in energy side, two different things going on there, and in the profitability. And that's why we downgraded the stock. We would prefer a lower entry point.
And when I talked to you, Jed, correct me if I'm misremembering, but your thesis, your reason that you were constructive on this name, it was the energy story, correct, Jed?
Energy, and then also, I think a lot of people are looking at robo-taxi and the future, the potential. Right now, I would say that, Tesla has been a stock that has transitioned, the valuation has moved from a lot of their core business to the things that they're going to do. But energy was our primary focus.
In the core business, Jed, I just spoke to another analyst, smart guy like yourself. Mm-hmm. He is more constructive on the name. And I talked to him about that core EV business. And in broad strokes, he was more optimistic. And I asked him why. And he said, well, it's that Model Y revamp. It's that new affordable model on the way. Your reaction to that argument?
I think those are all fair. The longer wheelbase in China on the Model Y, those could provide areas of relief. But across the board, all of the models are going to get $7,500 more expensive. And you have $2.8 billion of tax credits, which are pure margin. Those are the structural challenges that investors are going to have to wrestle with. And neither of those are going to show up this quarter or the next quarter. So quite frankly, I think if you're a trader and you're looking at the very near term, you could actually get, a little bit of upside here. But my job as a fundamental analyst to try and look at what's happening over the next 1 to 2 years, or sometimes even longer. These are going to be challenges to the business until robo-taxi or humanoid robots, until those business units become a larger, more material part of the of Tesla's P&L.
If we're aware of these challenges, though, Jed, Musk is aware of them. So what are the levers he's going to pull to navigate these dynamics?
I think you're seeing some of that in terms of change of personnel. And, I would suspect that, they're not going to allow the vehicles. So I think they're going to push really hard. And I think Elon's getting back into, the position he probably feels most comfortable in. He is a great operator and leader. And I think he's going to push hard now that his focus is squarely on Tesla.
Musk is now saying, listen, he's back, he's committed. There were, of course, investors who were getting kind of nervous there, Jed, I think, when he was talking so much about forming this new political party, questions understandably about his focus, his attention. Were you getting questions about that from your clients?
We got a couple, but I would agree with his statements. I do think that Elon is back and focused on the business. If we did not have the structural challenges to the subsidies and the zero tax credits expiring, I would be taking a more constructive stance on this discussion with you. So. I'm hopeful that he's going to be able to mitigate some of these things, and that we'll be able to become more constructive on the name.
When you are thinking about that robo-taxi service, Jed, how quickly do you think Musk can reasonably expand that service?
I think that's going to, we don't have it materially impacting our model until 28. So I think it'll be a challenge to pull it in much faster than that. And
what Jed, would you say are his competitive advantages as he takes on Waymo there?
Well, the competitive advantage is that he's, like most things that Elon does, is that they're taking a vertical integrated approach where Waymo is partnering with Uber. There's pros and cons of that. If Tesla can get this to work and they have a fundamentally lower cost structure compared to Waymo because they're using vision, so their tech stack is going to be cheaper, then they can weaponize price and take market share. And that could result in faster growth or a more profitable business model compared to the Waymo-Uber partnership.
Question, Jed, final question for you. So you go down the equivalent of a hold. I'm sure you got questions from your clients, Jed, about, listen, what are the, Jed, upside risks I need to think about to this decision? What'd you tell them?
Upside in terms of, what's going to cause it? Well, I think the upside here would be, we already have the delivery numbers, so we need to look at what the profitability is. Some of the things we're talking about are further out, so you probably get a little upside on the margin profile. And then next quarter, you're not going to get hit with, you're not going to get hit with a gap in deliveries. And you also have that refresh and longer wheelbase. So those are some of the upside opportunities. Now, the downside opportunities would be that you could create a bit of